If you look closely at the supply chains moving our global agriculture and construction materials, you'll find they are held together by something called woven raffia. It's the highly durable woven plastic fabric used to manufacture industrial sacks and heavy-duty packaging. To understand how this critical infrastructure is built, we have to look at Lohia Corp. They engineer the massive, high-speed circular weaving machines that manufacture this exact material. This chart shows Lohia Corp's consolidated financial footprint for fiscal year 2025. You can see their top-line revenue hitting 1,376.87 crore rupees, translating down to a profit after tax of 117.84 crore. Lohia Corp is a mature, cash-generating legacy enterprise, having spent decades building the operational scale required to power global logistics. Now, after 4 decades of private operation, Lohia Corp is preparing for an initial public offering, giving retail investors a rare chance to buy into an industrial titan. But there is a specific structural detail in this offering you need to understand. The entire IPO is structured as an offer for sale, or OFS. This means current shareholders are simply selling their existing stock to the public. Because no new shares are being issued, Lohia Corp itself will receive 0 cash proceeds from this event. None of this new public capital will go toward funding the company's future growth. This forces potential investors to ask a critical question. Is this offer for sale a warning sign of insiders heading for the exits, or is it a unique opportunity to acquire shares in a self-sustaining business? To figure that out, we need to weigh the hard evidence behind the bull and bear cases. Lohia's primary moat is their capacity to invent the future of technical textile machinery, moving beyond standard manufacturing into proprietary technology development. The physical engine behind this operation is the Hargovind Bajaj Research and Development Center, a dedicated 6,000 square meter facility. This pie chart breaks down the human capital. Look at this slice. 234 employees, 13.48% of the workforce, are dedicated to R&D. That investment yields a defensive barrier. They hold 60 granted Indian patents, alongside 55 international applications. This dense intellectual property portfolio creates a significant barrier to entry, making it difficult for overseas competitors to replicate their specific machine performance. Of course, any company manufacturing plastic processing machinery faces a clear regulatory threat, as global governments push back against virgin plastic use. Lohia has responded by engineering their way directly into the circular economy. They've developed entirely new lines of recycling machinery, specifically the Reclamax and ReclaPro series. These machines allow industrial clients to break down and repurpose waste plastics on site, ensuring customers remain compliant with tightening environmental mandates. Beyond the hardware, Lohia secures its customer base through its technical training and research center. To date, they have trained over 3,500 machine operators globally to run this specific equipment. Lohia supplies a full, closed-loop ecosystem, anchoring their patented machinery with the specifically trained workforce needed to operate it at peak efficiency, across the nearly 100 countries they serve. Operating a supply chain across 100 different countries does introduce significant logistical and financial variables. The most pressing issue on their balance sheet right now is foreign exchange, or FX, exposure. Take a look at this dual bar chart visualizing their foreign currency cash flow. You can see an imbalance. For fiscal year 2025, Lohia recorded over 6,600 million rupees in foreign inflows, compared to just 1,383 million in outflows. Because they take in significantly more foreign currency than they spent, minor fluctuations in global exchange rates can directly compress their final realized profit margins back home in India. And remember the structure of this IPO. Because it is a 100% offer for sale, the company must navigate these macroeconomic headwinds using only the cash they currently generate. Potential investors have to weigh that currency exposure and the lack of newly generated capital against a cash-generating engineering moat. The Lohia Corp IPO represents a play on hard engineering, global B2B market dominance, and a highly defensible R&D fortress that anchors the industrial world.